Hello and welcome. My name is Dominic Frisby, broadcasting to you today from the Holy Isle, just off the coast of Arran in Scotland. Very beautiful, as you can see. It's a lovely morning. Today's piece is called Currencies in Crisis, except two. So I wanted to consider the great irony klaxon, British pound today, and indeed currencies more generally. So many people, too many people, are forecasting some kind of debt crisis in the UK, and that would almost certainly take down sterling. Yet, sterling has actually had a pretty good year, by FX standards, that is. Of course, it's been crap against gold and Bitcoin, against proper money, but it's had a good year against the dollar. Now, a word of warning, my macro calls are generally pretty good, but on sterling they have been consistently terrible. Doesn't mean I won't eventually get one right. Maybe today's the day. So I go into this talk I try and go in with no preconceptions. I haven't totally decided which way I think sterling's going. I'm ambivalent, and I'm going to try and draw my conclusions based on the price action, which we'll look at as I speak. Now, were I to base my calls on the current fundamentals of the UK economy, high taxes, about to get higher, more regulation, more government spending, capital leaving, uncontrollable deficits, an unpopular, incompetent government with little in the way of coherent vision or first principles, but likely to be here for the next 4 years, and more, I'd be more bearish than Winnie the Pooh. But FX is a funny old game, as low IQ pundits, football pundits from the 1980s were prone to say. And on the other side of every currency pair, there's another nation with its own, sometimes bigger problems. Now, if you look at the direction of cable, pound dollar, for example, that tends to be determined by dollar strength or weakness rather than the pound, because the US has the much weightier economy. The pound could be woefully managed, it is, but if the US powers that be want the dollar lower, that urge will be more significant. Same goes for the yen or the euro. Interest rates are a huge factor too, and here in the UK, despite word that the Bank of England was going to take them down a notch or two, the recent news that UK inflation unexpectedly, it's always unexpectedly, hit its highest level since January 2024, means the UK is going to struggle to put down to cut rates. Inflation is supposed to be below 3%. It's currently 3.6%, highest of the G7 nations. And look at this headline from The Guardian if you want to see how mainstream thinking gets cause and effect completely backwards. Since when do food and fuel prices drive inflation? It is the other way round. They are the consequences of inflation. Meanwhile, the Bank of England Governor Andrew Bailey said only a few days ago in the Times, "I really do believe the path is downward for interest rates." They currently stand at 4.25% with the next MPC meeting on August the 7th. So those numbers leave him with even more egg on what is an already eggy face. It's going to be very hard to cut interest rates. It is hard to justify rates when we have the highest inflation in the G7. The market, meanwhile, seems to think we won't get lower rates because the pound actually steadied when that news came up, and after a little sort of wobble, it's creeping back up again. Having said all of that, if the bank wants lower rates, I'm sure they'll find some wonk-speak sophistry to justify it. So obviously, in all of this, you should own some gold and silver, some Bitcoin. If you're buying gold and silver to protect yourself in these interesting times, the bullion dealer I use and recommend is the Pure Gold Company. Pricing is competitive and quality of service is high. They deliver to the UK, the US, Canada, and Europe, or you can store your gold with them. And there is a link to them in the description. Now, let's take the big picture view. And we're going to look at the world's most important currency, the US dollar, going all the way back to 1990. And its bear and bull trends tend to last many years. 1995 to 2000, bull market. 2000 to 2008, bear market. 2008 to 2022, bull market. And the near 15-year bull market from 2008 to 2022 looks like it's over. It looks like we're in another bear cycle. How long does it go on? Do we eventually end up below 80 again? Very possible. Also of note is that how this year's declines stopped at that rising blue trend line. Perhaps we're not in a bear cycle after all, and this multi-year bull market that started in 2008 now resumes. Almost nobody is looking for that, so that perhaps is exactly what we get. That would be unexpectedly. So after such precipitous falls this year from 110 to 96, a rebound rally to at least 100, and possibly that choppy zone between 100 and 105 is pretty likely, even if it only proves to be a counter-trend rally. Now, I ran a poll on my Substack. You should all subscribe to my Substack, of course. Is the US dollar early in a multi-year bear market? And 66% of readers said yes, it's going lower. 34% said the bull market will resume. So 2/3 to 1/3. So to sterling and what's next. Now, any dollar strength and sterling will hit the skids. Just with this tiny rise in the US dollar in early January 96 to 98, sterling went from 138 to 133. And the reason my sterling calls have been so woeful is that I got too wedded to my own theory, Frisby's flux, sterling's 8-year cycle. Every 8 years, going all the way back to 1968, sterling seems to capitulate. We saw it in 1968 with the collapse of the London gold pool, 1976 with the sterling crisis, 1984-85, that ended with the Plaza Accord where they had to devalue the US dollar, 1992, Black Wednesday, George Soros shorting the pound, 2000, the dot-com bust, 2008, the global financial crisis, 2016, the Brexit surprise. And I was looking for another capitulation in 2024, 2025, which never came. Not yet, anyway. Though there have been plenty since 2016. There was the Theresa May flash crash, and in 2018, and that was in 2018, and the Kwarteng Trust budget in 2022. In any case, sterling hasn't been above 145 since before the Brexit vote 9 years ago. Made it to 138 on this run, but for decades, 140 to 145 was support. Now it's resistance. So here's the pound against the dollar over the past year with 10 and 50-day moving averages. Those are those green and red lines, and they show the short and medium-term trends. In the short term, we have turned down. But in the intermediate term, it looks like things are, they might be turning. Things are flattening out. But we don't yet have confirmation of any major change in direction. So I'm going to hedge and say maybe we go a little bit lower in the short term, maybe not, but this market is eventually going to go to that 140, 145 zone before any kind of major reversal. In other words, it's probably going to go a bit higher. No strong conviction on that, just the habits of this pair. And I did another poll on the Substack. Has sterling topped against the US dollar? 63% said yes, it's going lower. 37% said no. This is just an interim pullback. Now, where I see a big opportunity opening up, and every time I bet on this, I either lose money or I get stopped out, is against the Japanese yen. The yen keeps looking like its major turn is upon us before it reverses again. When the yen finally does turn, and because of the carry trade, everyone borrows in yen to speculate elsewhere, they borrow at cheap rates, it tends to move very quickly because the money goes straight back to cover the positions. Look at 2007, 2008, 2015, it moves quickly because, as I say, everyone runs to cover their position. But just ask anyone who's been to Japan lately. All of a sudden, it is a cheap country. The yen is weak. It will not be forever. Looked like it was reversing last year, but then it rallied back again. And finally, here for your interest is the pound against the euro since just before the Brexit vote. And this one has been stuck in a tight range. Not perhaps what you'd expect post-divorce. I thought we were meant to separate, not get closer, but hey, one of one of Brexit's many surprises. The euro's been stronger than the pound this year, which is worth noting. And that one looks like the pound is headed lower. Bottom line is this: every national currency has its issues. Two supranational currencies leave them all standing, and those two are, of course, gold and Bitcoin. And that is where I recommend parking your capital. It won't be the case forever, but for now, as I see it, it is. So thank you very much for watching this video. If you enjoyed it, please share it, please like it, please subscribe to my channel, please subscribe to my Substack, all of that stuff. Links are in the description. Thank you very much for watching. Until next time, goodbye.